Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, of course, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Stephen G., Craig S., Nimish P., Thomas P., Jay Lowry, and Jeff S. On the program today is a returning guest. Scott Melbye is back with us. Scott is the president and CEO of Uranium Royalty Corp. The company is focused on building a portfolio of royalties and streams for uranium assets globally, with a flexible financial model to assist companies towards production in the form of royalty, stream, offtake, equity investment, physical lending, and conventional debt instruments. At this time, the company is the only pure-play uranium royalty and stream company in the uranium sector. Uranium Royalty is listed on the NASDAQ under the symbol UROY and also on the Toronto Stock Exchange under the symbol URC. Scott, thanks for coming back to the program. Welcome.
Yeah, well, thanks, Andrew. It's always a pleasure and exciting times in uranium and nuclear space. So lots to talk about.
Yeah, Scott, absolutely. Well, why don't we jump right in here? Good to have you back on the program. It's been a while since we've put together a podcast. And yeah, why don't we start off here, Scott, as customary, and as our audience can probably guess, why don't we kick it off with you giving us some of your thoughts on where we stand in the uranium market so far during 2024, and what you would expect going forward for the rest of the year.
You know, we've had quite a dramatic move in the spot price, as everyone's aware, and over the last 18 months, seeing uranium price go from 50 to over $100 a pound, and then pull back into the mid 80s, and now trading around $88, $89 a pound. But really, it's just a reflection of the supply squeeze that we're in. I mean, our industry's been in a structural deficit for some time, meaning our production globally has lagged consumption for some time, which indicates that we've been living off of secondary supplies and inventories to fill the gap. And in that period of time, it didn't matter what production guidance was or whether a mine started up as advertised or not, because the inventories were sufficient to kind of moderate any tightness in the market. But as we know, from 2017 on, really, with the production discipline that global producers exhibited, really working to rebalance that market, and then the financial speculators diving in and really, I would say, accelerating that rebalancing rather quickly. The likes of Sprott Physical Uranium Trust, Yellowcake, Zuri Invest, and just companies like URC and UEC coming into the market and buying material off the spot market really caused the market to rebalance and go into deficit almost overnight. So no longer are we talking about keeping pounds in the ground and shutting mines in and delaying development. We're now in a market that desperately needs new pounds, new mine development, and demand has begun again to take off. During the post-Fukushima period, we saw demand either flat or declining due to the kind of shutdowns in Germany and impacts in Japan and elsewhere. Those impacts are long gone now, and we're full speed ahead with growth in large reactors, and now beginning to see the front edge of the demand from SMRs. So we're in a market that even if you give kind of the major producers credit for full production in Kazakhstan and in Canada and elsewhere, we probably need 8 to 10 new uranium mines coming online between now and 2030, which is quite a change from where we've been recently. I mean, we see visibility to some of that beginning to happen, and no surprise is that the earliest movers tend to be the restart of mines that were in standby. So, very proud of where the U.S. industry is right now. We have 5 U.S. producers that have either restarted production or are restarting. You've seen Boss and Paladin get back into production, but those are really the low-hanging fruit. Those are the easy ones. Now we need to call on kind of new mine developments, which may be coming from sub-Saharan Africa, or we might be relying on Kazakhstan or elsewhere. And that's where it gets interesting. I think also the contracting cycle that we've seen resume. We've only recently returned to long-term contracting levels that approach kind of replacement rates for long-term supplies. But even this amount of activity has largely, and in some cases, fully committed the available production. I mean, Cameco is a great example where they're largely committed through 2028 and beyond. So that means that utilities that want long-term coverage are needing to go to the new producers, which is great. It's helping stimulate that new production, but some of it's not yet in production yet. So there is kind of a higher degree of risk going forward. And like I said earlier, it now matters if existing producers do not meet production guidance or startup of new mines don't come on as expected, because the pounds are needed. We don't have the inventory flex anymore to balance the market.
Yeah, Scott, that's a good brief for us here and updating some of the audience as well, some of our new audience who are just probably listening to you for the first time. I'm sure there's a bunch of new audience on our channel. They're catching this for the first time and are listening to you here. I liken it to, you mentioned the low-hanging fruit, if you will, and I look at it as, even some of those low-hanging fruit, as you well know, have some substantial problems associated with their projects that have yet to be proven and demonstrated. And so, you've got that piece of it. And also just your comment, I have to use the analogy of Kazatoproms and the Camecos of the world, if you will, to a lesser extent, the Uranos, Uranium ones. These majors kind of sit at the top of this chicken coop, if you will. As they get filled up and their, obligations are filled in, it kind of goes down the chicken coop, if you will, Scott, and the poop falls downhill a bit. Gets into that second, third, fourth tier, and maybe there's some chickens on the fringe that maybe aren't as saturated as much that might be standouts in the future. But I kind of have to use that analogy as far as, now we're getting into some of the troubled assets, maybe some of the high cost assets, which at $100 uranium, might start to be in the money. So it's going to be interesting to see. And with that, you have an increasing level of uncertainty, which utilities don't like that either. And then of course you have replacement rate, as you said, and then even the potential, because of the quality of contracting, that maybe there's additional contracting that gets slid into the mix because of uncertainty regarding the quality and even the certainty that the management team you're dealing with on the counterparty side can even deliver that yellow cake in a can.
Yeah, it's true. I
So
mean, a lot of demand that we assume is under contract, if mines don't start up on time, either the miner needs to buy pounds to fulfill the contracts if it's open origin, or the utilities are going to need to backfill those supplies. So as it is, the unfilled commitments through about 2033 are close or over 400 million. So that's taking into account that everybody delivers on time and as expected. But yeah, it's interesting. I mean, for us, yeah, we are calling now on the second and third tier producers globally to meet that gap, and that shouldn't be thought of is a derogatory term. A lot of second and third tier producers are going to emerge in this cycle and become kind of first tier producers and called on and steady state producers. And that's where Uranium Royalty is looking at the entire cohort of potential miners and developers and saying, okay, where can we come alongside these miners, developers, provide 25, 50, $100 million in financing to get them over the hump and into production and be part of that supply mix. And it's frankly a very exciting part of my job is to be able to not just look in North America. With my UEC hat, we're very much U.S. and Canadian focused, but at URC it's very much a global look, and it's exciting to go to Australia and sit down with CFOs and CEOs and see how we can come alongside and help them. Also, a lot of opportunities in Africa. Of course, Africa is a mixed bag of political, geopolitical risks, but we need mine production coming from Africa, and then you layer on just the geopolitics of China and Russia. We kind of look at the market as a global market, and a lot of the sort of global deficit numbers are assuming that uranium trades freely amongst the East and West. But I think the bifurcation of the uranium market is very real and kind of splitting along BRICS lines, which kind of puts Russia and China and India and others in one camp, and Europe and North America in another camp. In that split world, I'm pretty sure Kazakhstan falls in the Russia and China camp, and I think that's unfortunate for the West. Now, the good news is the West does have Australia, Canada, and the United States, which there's a lot more, I think, projects in those jurisdictions are being underdeveloped at present. And I think there's going to be enormous growth in those jurisdictions. Africa's a mixed bag. You have countries that are heavily under the influence of China already, and then others that are seeing increasing interest from Russia and China to control uranium and other mineral resources. So it's a really intriguing market globally right now. And I think those of us that were all in Kazakhstan last week, it was interesting to note that there were very few US utilities there and a lot of Russians and Chinese in attendance. And well, let's face it, I mean, Russia needs Kazakhstan now more than they ever have for oil, gas, and uranium that will keep their Rosatom nuclear fuel and nuclear energy company energized, and all the reactors that they're selling in third countries like Iran, Egypt, Belarus, Bangladesh all come with fuel supply. And so the Kazakh uranium that Uranium One controls in that country, close to half the production in that country is already controlled by Russia. The other half now is beginning very quickly, gobbled up by the Chinese through direct ownership interests in mines like Orderlick, or big contracts at CNNC and CGN that are locking up a lot of uncommitted production that they don't have direct ownership interest over. And then even the Alashanko Trading Hub, which is meant to sound to be very global in nature, a global trading hub. But let's face it, every pound of uranium that goes across the border and from Kazakhstan into China at Alashanko will end up in a Chinese reactor. And so for them, it's another security of supply move to direct more Kazakh production to China and less to Russia or Europe or North America. So
Right.
interesting times, but it's good times. It's exciting times for miners and developers in solid jurisdictions where I think United States production is really on an upswing. I think Saskatchewan will see the coming decade as an enormous period of growth for additional mines beyond the ones that we traditionally think about, McArthur River and Cigar Lake. I think you see additional mines now really growing their contribution to the global mix. And so exciting times, but lots of risks to navigate.
I think this just goes back to movement again within the chicken coop. There's going to be chickens that move up the rungs, if you will, and there's
Mhm.
going to be these repositioning that's going to occur. And I think that's the way to kind of look at the big picture a bit here. And then, yeah, with respect to Africa, we haven't said this often, but it was certainly in some past private notes to our members that it's possible that Niger could become the new Sudan. And while few parties want that, it's a tough one to get a hold as to real outcomes there. With respect to Russia, as we've said for years, Scott, going back to 2018, 2019, the order book of Rosatom is absolutely great. And they've done a nice job. The Russians have been underestimated time and time again. And I don't know what it's going to take for some people in Washington and elsewhere to get off their shiny seats and actually do something. It's just really appalling. And we've been talking about this, and so have you, for years,
Yeah.
about successful export program of the Russians. And hats off in that regard. I mean, they have done a fantastic job and continue to do so. And
Yeah, it's very similar to, the early days of our own industry when companies, American companies like Westinghouse and General Electric were selling reactors all over the world. And at the same time, were extending American influence around the world as a result. It's not lost on the Russians. And, when they sell a reactor to Turkey, that's an 80-year relationship that they're entering into with them. And so, I think I think our State Department realizes it. I think there is a desire, to see the U.S. nuclear energy industry regain its international leadership, it may be that we focus that energy on SMRs and advanced reactors. Maybe that's the niche that we can really explore. And you're seeing it already with technology sales and moves in Central Europe, countries of Romania, Poland, Czech Republic. This part of the world that I think outside of Asia, in my mind, is the fastest growing region, because you have a unique situation where these countries are all becoming integrated into the European community. They're being forced to shut down their coal-fired power generation, which, like the Western United States, that's the majority of their electricity comes from coal presently. So they've got to move away from coal, but they can't turn to Russia for natural gas. So nuclear is the natural choice for them. So we're seeing big reactors like Westinghouse making inroads. We're seeing NuScale coming in with SMRs. So pretty exciting times. But yeah, we're in a global competition. I think for the utilities, they're not competing. Duke is not competing with Dominion for energy supplies, for uranium supplies going forward. They're competing with Russia and China, and that we've kind of got to look at it as a big game. So, but like I said, U.S. and Canadian resources are underdeveloped at present. So I think we have a lot of growth that can. I'm not worried that we can't be independent of Russian supplies, and that includes uranium conversion and enrichment, with all the attention being paid in Congress. And thank God we have bipartisan support for our industry. It's something I haven't seen in my 40 years, is really true, strong bipartisan support. I can go into a Democrat senator's office and get the same reception as going into some of our more traditional Republican supporters. And that means that things can happen. The NRC can be reformed. The nuclear fuel cycle in the United States can be revitalized, and new plants can be built at home and abroad. So we have much to be optimistic for, but there is a big strategic shift that we need to be aware of.
Yeah, Scott, well said. And I would just say it looks promising. There's a lot of promises and a little bit of hot air coming out there from Washington, but shame on them for putting us in this position. That's
Mhm.
really the reality of it. And as far as I'm concerned, I look at this as, start this battle with proven conventional. And then if you want to come back and you want to start throwing, icing on the cake with some of this other technology, which again is continuing to be slow to get off the ground, I think that's the way to go about it. But so many distractions, sadly, and the discussion half the time is, well, let's talk about it after the election to see if I'm still in my position. You know how it goes, Scott. You
Yeah,
know these folks.
you have a advantage, this go around, to where, I have very strong opinions as to who I think will win the presidential election in November. But what's important is it doesn't matter whether we have a Republican or Democrat in the White House for the first time in my career, because both support nuclear energy. If you're Republican, you like nuclear energy as a integral part of an all the above energy strategy that provides hedges against fluctuations in natural gas prices. If you're on the Democratic side, you love the carbon free aspects of nuclear power, and it provides a base load that helps wind and solar over its shortcomings on the grid. So we really are fortunate in that regard. No matter who wins in November, I don't see the course of nuclear
Yeah.
energy changing.
Let's see their actions. There's all kinds of stories that can be told at the podium
Mhm.
pre-election and even after. Let's see based on their actions and see where they write the checks and if they actually put their money where their mouth is, because we also know that there's other influences at work, as you well know, Scott, and with your experience in Section 232, that other groups can have tremendous power in basically wiping away, even though that was a great catalyst for what we have today. Very critical part back then, although most people didn't see it as a critical part back then because it was pretty much a non-event back then, has set
Yeah,
the stage for what we're seeing today. But people have to keep it in context. This stuff takes time. It's tough to get anything done in 4 years. And you have the other forces that are still out there pressing and pulling against these folks, and just the lobbyist big corporation influence now
yeah,
over these elected people that to some degree don't have full control themselves. And as you and I both know, but we'll see what happens here and see how things progress. And I won't be participating in the vote, Scott. I vote in other means and methods, but
Yeah.
I won't be participating by paper anyway. So I appreciate
Mhm.
the comments nonetheless. One of the other things, just real quick before we move into URC, which is the topic of this podcast, which I want to
Mhm.
get to in just a moment. Any thoughts coming out of the conference? Any takeaways that you thought were interesting that you actually picked up on that you thought was interesting to follow up on?
Yeah, I just, whether participants came away with it or not, I think the big elephant in the room is that, the world's largest uranium producer, um, Kazatomprom and the Kazakhs will continue to be the world's largest uranium producer. Now, whether they produce 60, 70, or 80 million pounds, there's a lot of discussion around the acid, sulfuric acid problems and just structural challenges to them being able to meet production guidance. But the fact remains is that most of that production going forward, despite the fact, and listen, I served as an advisor to Kazatomprom and helped craft their global marketing strategy, which, was encouraging them to diversify their sales into Europe and North America. And to some extent, they're very successful in doing that. But I think what's going to happen going forward in the next 5 to 6 years is as those contracts roll off, more and more of that supply gets gobbled up by the Chinese and Russians. And you see it, people say, well, okay, Kazakhstan is an independent sovereign nation. I'm like, well, yeah, they are. But, when there was a coup that tried to overthrow the government, it wasn't American Delta Force that came in and rescued the day. It was Russian Spetsnaz forces that came in and shut down the protests. Um, I think people underestimate the involvement that the Russians have in the state-owned entities and the sovereign wealth funds, and really have a lot of sort of soft control over that independent nation, if you will. And Budnoskoye was a great example where probably one of the world's biggest, newest mines that kind of was came to market didn't come to market. You would think that as a publicly traded company, Kazatomprom would have explored and ran a process to see what would be the best price that they could get for selling an interest in that really promising new mine development, and it ended up going sole source to the Russians. And that's been the source of a lot of turnover at Kazatomprom and others, and they're in a difficult position. They have two masters. They have to answer to capital markets and tell us the things that we want to hear in Western capital markets. But the more Western facing they sound in addressing that group, that tends to anger Russia because their interests are getting more supply to Russia, not bypassing Port of St. Petersburg, going through the Caspian Sea and Armenia and that Caspian route. So they're in a very difficult position. Whether people realize that or saw that firsthand, hard to say. Because I mean, frankly, Almaty showed very nicely. It was a good conference, but that's the real elephant in the room for our industry right now.
Scott, that's great. I appreciate the insights. And I know there was a lot of folks who weren't able to make it over there, and I commend you for heading over there and putting forth that effort and getting some of those insights that you can only get at a conference. So I really
Yeah.
appreciate you giving us a little bit of flavor there on Kazatomprom and some of their efforts and where their materials really headed at the end of this as things continue. And the fact is, we know it's an extension of the Russians and that they've aligned themselves with the Russians and the Chinese. And that's just purely the fact, despite some of the stage end running that might be happening.
Mhm.
And that's fine. No complaints there. They need to do what they need to do and they need to run their business accordingly. And if they can also supply net of other commitments to the West, so be it. I want to get into URC, and I'm sure we'll talk a
Yeah.
little bit more about these other macro items as we go here. But recently, you guys just closed up a bought deal to add more cash to the treasury. I'm assuming, obviously,
Mhm.
for transactional purposes. Just talk about what you can regarding the use of proceeds on that last bought deal.
As you know, we, as a relatively young company, coming into an industry that was in a major bear down cycle following Fukushima, you might say that we entered into the uranium royalty and streaming space kind of early on because we were still in coming out of that down cycle. But we're very fortunate to be, fully up and operational, given where we're at today. But we recognize that there would be a period of time that our portfolio of existing royalties would start to cash flow. I mean, most uranium mines around the world were either in shut in or at reduced production, and our portfolio was no exception. But really, over the last 12 to 18 months, that's really changing. We're seeing a number of our portfolio assets returning to production. We're beginning to see cash flow under those royalties. But it was a conscious effort as we transitioned to this point to take a very significant play in physical uranium off the bottom of the cycle. And so, to date, we've purchased over 3 million pounds at a weighted average cost of $56 a pound. We've sold a little over 500,000 pounds at 59, representing market prices at the time of those sales. But we still have an inventory of 2.6 million pounds on hand at a weighted average cost of 56. So, at today's $90 a pound, that's about 235 million in just the market value of that inventory. Our market cap today is 276 million. So, we're almost fully valued on just the physical uranium inventories and not giving any credit for the 20 royalties on 18 projects that will be are beginning to throw off cash flow and will throw off significant cash flow in the coming years. We don't believe that the market is capped out at these levels. We think the uranium market is paused. I think the pullback to 84 was just a normal reaction to anything that rises that quickly, that high, and has kind of fallen back to consolidate at these levels. And this same is true for the equities. I think the equities and physical uranium market are consolidated and are forming a base from which the next leg up is coming. And given our read of the supply and demand fundamentals, the desire to have additional uranium inventory makes sense for us. Now, over the longer term, will this big war chest of physical uranium and the dollars that it represents, will that be turned to royalties and streams? Absolutely. So I think this should be viewed as transitory. But from that last raise, we have committed to purchase additional uranium. So over the remaining course of this year, we'll purchase another 350,000 pounds from various sellers at an average cost of $87.43. So roughly a little below where we are right now. So those proceeds were plowed back into physical uranium. And ultimately, that physical uranium holdings will be turned to cash and plowed into royalties and streams. So as a $25 million royalty opportunity comes to fruition, that uranium will be sold and turned to cash. Now, are we going to be disciplined sellers of that? Yes, just as we have. Sometimes people say, well, okay, these inventories are going to come back into the market and depress prices. Well, between UEC and URC, we've purchased over 10 million pounds in the spot market and have sold over 5 million. And last time I checked, the uranium market went from 50 to 100 over the course of that activity. So we can do it in a very clever way and have done so. So really the proceeds from that raise are now parked in additional uranium purchases.
As you guys do this opportunistic selling, there are some other options as you guys continue down the pathway with your flexible vehicle, and that is just overall your strategy about exiting the physical uranium holdings over time. And assuming this is not just opportunistic sales, maybe you unwind that through lending, through contracting, through a market sale, which we already just discussed, and many other mechanisms, creative mechanisms that you can think of, because your counterparty sometimes could lean upon your guys' inventory to assist them with some of their commitments. So just talk about maybe some different ways you might unwind in the future.
You're bang on with that. And I note that, we're holding physical uranium. I mean, over time, we've had very significant holdings in Yellowcake, PLC, and Sprott Physical Uranium Trust. But as we sit now, we're holding all physical. Why? Because I think physical uranium has more strategic value in a tightening market, then a share of Sprott. I mean, the share of Sprott and Yellowcake will go up and in markets as a response. But I think having physical uranium create strategic value. And so you're absolutely right. We're beginning to draw interest from strategic players, whether they come from major utilities globally are looking at URC as potentially an investment for them. Could that investment, if it was big enough, give them access or first right of refusal on some of that inventory at some prescribed prices? Absolutely. We're seeing, even interest from the tech world that are realizing that if they're going to see the AI boom continue for some of these, the magnificent seven tech companies, they're not going to have the AI dream die on lack of electricity, and so they're really coming very seriously and significantly into investment in SMRs. And a number of these are smart enough to know that, well, if we're investing in SMRs and we're kind of newcomers to this industry, we better lock up uranium conversion and enrichment, and they're willing to make investments in those sectors. So it does present kind of a strategic value of 2.6 million pounds, which are not committed to anyone in a tightening market, presents a lot of different angles, and you just addressed a number of possibilities.
I think there's some good ideas that can be had there. And of course, we know that there's some other groups out there that have physical holdings, and there's always discussion about, while they'll say, "Oh, this is locked away forever, and it's basically pounds on the ground that'll never get extracted," and all this stuff.
Mm.
The reality is there's different ways to go about doing this that can be very profitable as an exit for creating value for those shareholders. There are vehicles out there that are purely there to collect fees. They have other
Yeah,
physical funds. We've seen those physical funds outside uranium, and it's just a fee collection vehicle. And so people have to kind of understand the different motives and incentives here and how this is set
absolutely.
up.
Some are
URC is in a
sequesters and some aren't, definitely.
right. Let's shift into capital structure for a moment. I'd like to have you just cover shares outstanding at this point, cash on hand, if you can refresh that now where we are,
Yeah,
and then also major shareholders on the roster.
yes, we have 120 million shares outstanding, fully diluted, about 136 million. Key shareholders, we are in all the indexes. So the URNMs and Global X's and all that. We are bringing on kind of a new kind of, it's true for both UEC and URC. We're seeing kind of new investors coming in beyond our usual resource-focused funds and more generalists that like the uranium and nuclear energy story. So we began to add more institutional, but continue to have very large retail shareholding. The market cap that we're at today, 276 million, that's way down. I mean, we're probably trading right now at 0.5 P to NAV, which is not where a royalty company should be and not where we want to be. I mean, our shares, have been very interesting. If you followed UROY over the last 4 or 5 years, if you want to kind of generalize on it, in 2021 and 2023, we led global resource royalty and streaming companies in that category. That puts us in with base and precious metals and lithium and other commodities. And we've been amongst the leading companies in the uranium space in terms of performance gains in those 2 years. In 2022 and 2024, we've lagged the median, and it makes me wonder whether we just reside kind of on the extremes of volatility, and that's okay. When things cycle back, and I think we are ready for the next leg up for not just URC, but for all the uranium equities and the spot uranium price, I would expect us to be back up at top of the pack for resource royalty and streaming companies and uranium equities, but we're not there today. And so I guess the other side of that coin is it's a very attractive entry point. Like I said, our cash and marketable securities and inventories are Canadian 330 million. That's a huge war chest for a company who's, the kind of the pipeline of projects we're looking at. There's obviously smaller existing royalties that we're working to acquire that could be, under 6 million to acquire existing royalties on various projects. The financing opportunities, that is probably 80% of what we're looking at right now, fall into the 25, 50, 100 million ticket size. And so, we can fund a lot of that, those acquisitions, from the balance sheet. So we're in pretty good shape in that regard.
One more question on capital structure, and then we'll move on to a
Mhm.
few other things here. One of the questions that came in was open market buying. As you said, in the case of URC, there's a compelling price point here.
Yeah.
The question was, when was the last time you purchased shares of URC and unrelated UEC?
Yeah. So on UEC, I took advantage of that kind of reckless short play, that short attack that we responded to spectacularly, and really cut them off at the knees. With URC, listen, I've got the warrants which expire at the end of this year, so I'll look to exercise those and hold the shares from that exercise. But I think people ask me, well, with this pullback, is it time to sell, hold, or buy? I mean, definitely not time to sell. And holding just kind of indicates that we're not sure which direction things are going. I really recommend, buying at these levels, trading at 0.5 P to NAV. That's a really attractive entry point for a company that has, the track record of the past performance in, when the uranium market rallies, we tend to outperform the peers in those periods. So that'll be my next purchase, I guess, will be the exercise of the warrants and holding those shares. But I think I'm probably fifth or sixth largest shareholder in the company and happy to be in that position.
Scott, thanks for that. And the warrants, fairly straightforward here. I mean, these warrants will most likely be exercised at the end of the year. That's a roughly 30 million CAD ticket by just rough what I can see here anyway on a quick look. So that's, and I'm sure use of proceeds, we already know what that is. So we'll
Yeah.
move on there. But that is another source of money. Those things are pretty well in the money by
Mhm.
my understanding here. So we should see those come in at the end of the year. Congratulations on that. Let's get on to progress with new project specific transactions, Scott. There hasn't been much on that front since early 2023. And of course, we know you can't mention names. And
Yeah.
of course, it's obvious that you're having discussions. I mean, we get
Yep.
that. But are there any serious discussions with new project transactions for URC? And would you expect transactions to be completed, at least one transaction completed this year?
Yeah, absolutely. And yeah, it is in our small industry, we could play 20 questions and you'd have all of our activities figured out by the sixth or seventh question. So we have to, I'll talk in very general terms. We've got a pretty healthy pipeline right now, six or seven projects that are underway. Some of them are smaller royalty interests on projects, existing royalty interests, buying those interests from third parties that give us further exposure in projects. But as I said, most of the discussions have been with miners and developers and providing capital that they need to get over the hump and into production or advance. And so, there's two categories there. There's the projects that can produce and cash flow in this cycle. And let's face it, those are the unicorns. We talked about them earlier, that if you have a ability, you either got a restart of an operation or you've got something so fully permitted that it's really now just bring it into production. That's a really special case. And so obviously we're talking to those parties. And also kind of another category might be projects which are, I would call world class, that may not be in production quickly, but in this bull market, you're going to see their business models really advance positively, in this environment. So, that might be a little bit longer term cash flow, but we want to be positioned in them as well. We're looking at kind of all sorts of things. We've been kind of engaging in an informal ad hoc basis with folks that kind of come from the structured finance side of the business They love partnering with us because we have, specific uranium industry knowledge, and we're helping them narrow their investment focus. And some of these parties are also helping us provide additional structured finance to our offerings. So we might, as an example, we might combine aspects of a royalty and stream with a convertible debenture and be able to kind of provide something creative along those lines. And maybe the convertible debenture converts to physical uranium, which would be quite unique. So these are the kind of things we're working on. There are opportunities that are kind of really big opportunities. They might be in the byproduct categories where mines whose primary focus is gold, nickel, copper, other things, and have the ability with a small investment to create a uranium circuit to recover uranium alongside the primary commodity. Those are really attractive to us as well, and we've been in discussions with a couple parties on that front where we might be able to take 100% of the output of that venture and essentially manage the uranium operations for someone who's that's not their core business. Would I like to have added more deals to the portfolio over the last year? I guess if it gives investors any comfort, it's not for lack of opportunities, but I would say that we are being fairly disciplined. I don't want to make a mistake of, if I wanted to overpay for these royalties and streams, we could have added 6 over the last year. We want to be disciplined and recognize that, we want to make accretive acquisitions and not overpay for them. So, we're approaching it in a very disciplined manner, but no shortage of opportunities. Over the last months of this year, I'll make trips to both Australia and hoping to make a very extended trip throughout Africa and visit all the uranium producing countries and visit those operations and see what we can do on that front. So it's exciting. It's the best part of my job is to really fulfill that role as someone kind of solve a problem on the capital structure for these new mine developments.
Scott, thank you for that. Of course, there is near-term, mid-term, and long-term opportunities here from a
Yeah.
royalty and stream perspective as well. So people have to kind of keep that in focus, and then how that matches up in your guys' preferred financial model and how that works. With that piece, I wanted to ask you when you could tell the audience that there would be
Mhm.
expected revenue coming from some of those key royalties and streams.
Yeah.
Would that be in 2025, Scott? It doesn't look like it would happen this year, but maybe. But if so, just speak to that
Yeah.
approximately when and what those numbers would be, and then we'll talk a few specific projects.
We're in the cash flowing state now with the resumption of McArthur River and Cigar Lake and ramping up to full production. Under the McArthur River royalty, we have a physical uranium payout under that. So we're receiving book transfers of uranium from the McArthur River production to our account at Blind River in Ontario. For last year, it was about $1.2 million worth of physical uranium. That was based on last year's production, last year's prices. That will obviously go up with higher uranium prices, higher production. Cigar Lake will be a larger royalty than McArthur, could be $5 to $6 million on its own, but it's in that net profit interest calculation where we're still working down some of the expense bucket for those calculations. But when it does start to, and that really, the speed at which that draws down depends on how much is being produced from Cigar Lake and at what prices are being realized, to get us to that point. But it's still probably 2-3 years away. But if you wanted to take a net, and we also have other projects like we've got a small fixed, it's about a 4 cents per pound royalty on Paladin production from Langer Heinrich, so that's obviously kicking in now. And Lance Peninsula, where we have a royalty interest on that ISR project. We've got a 1% gross revenue royalty on all the production there. And parts of the mine, we actually have 5% coverage. So, as these get into production, it will contribute to that. But if you wanted to look at it on an aggregated basis, and I please caution everyone that there's so many assumptions, and all of them are outside of our control, frankly. We're not joint venture partners in our 18 projects that we have interests in. We rely on their public disclosures. We do, in our internal modeling, we'll put our professional judgment and tweak those one way or the other. But if you had to ask us what would be the revenue projections, we'll reach 10 million in revenue by 2027 and 20 million by 2030 from the existing portfolio. I mean, that over time, gets up to the, 40 million range as some of our longer dated royalties kick in. But that kind of gives you an idea. Very respectable from the existing portfolio, but I'll be honest with you. I mean, the main focus is to grow that portfolio. That amount of revenue is not sufficient for the company. We want to be adding. If we have 20 royalties today, we want to have 25 royalties by this time next year. So that's
Right.
really the growth side of what we're doing.
Okay. And I think those numbers that you just said are quite conservative, especially taking into no consideration whatsoever that there'll be other transactions coming down the pipe for URC. I'm certain of
Yeah,
that.
absolutely.
So we can count on Cigar, we can count on MacArthur. That'll start to come in here. Langer Heinrich, certainly that will come in some form. The other one you mentioned, I'm not so certain myself at my desk about that one, but we'll see what happens. And the other thing, Whirlwind is another one that, of course, Energy Fuels is going
Yeah.
to production probably over the next 24, maybe 36 months, maybe better. I would expect you guys will see something from that one as well. And then
Well,
would
yeah,
there
like
be?
before you leave that, it is interesting because, we have quite a portfolio in the Colorado Plateau. So meaning Arizona, New Mexico, Utah, Colorado, projects managed by UEC, Energy Fuels, Anfield, Western Uranium. And, they're driven by different economics than ISR in the US. I mean, obviously the most aggressive movers into production are the ISR mining of sandstone deposits in places like Texas and Wyoming. But conventional mines in the plateau benefit from higher grades. There is milling capacity if it's accessible from Energy Fuels, but others are talking about adding to milling capacity. But they also benefit from rare earth minerals and vanadium. So we've always kind of tucked these royalties away, but in $100 uranium market, they start to crystallize. And so, you mentioned Whirlwind is a great example, Energy Queen, some of these, San Rafael, all I think are going to be developed here at some point and are being developed in some cases.
Yes, and as you well know, Energy Fuels has stepped up the efforts on some of their restarts. Pinion Plain
Yep.
as one, LaSalle, these operations. And I know you get to be careful with this one because of potential transactions here for you guys in the future. But any other projects that you can speak of, or maybe just say, hey, we do expect others to come in as part of our expectations on restarts or what have you, developments, maybe over the next 12 to 24 months. Scott, do you think that there would be maybe some other ones that would pop up in that time frame?
In 24 months, yeah, I guess Dewey Burdock. Depends on what Encore. Obviously their focus is in Texas presently. Another one that's kind of a sleeper is Church Rock with Laramide. We have a 4% NSR there. That is not conventional. It's ISR. It is in New Mexico, which is problematic, but it's not on tribal lands. It's near tribal lands. But at some point, that is a world-class ISR deposit. Just happens to be in New Mexico. But that's something that could crystallize if you expand that scope out. Rough Rider, we have a close to 2% NSR on a project, which will likely be a mine which is a successor to kind of the current MacArthur's Cigar Lake operations. I won't get ahead of UEC, but they're planning on releasing an economic study by summer that details what would be the development options, milling options, production rates, development timelines. But if you want to just do a ballpark on that, if that mine was in production by 2030, produced at 6 million pounds a year, what's the value of 2% of 6 million pounds selling at $100 a pound? You begin to see how, as you go a few years out, our revenue projections begin to get, to jump up pretty dramatically. But that's just one example. So, well, another one too, it's not going to be near term, but what about Dawn Lake? We have interests on that Cameco project, which is the extension of IsoEnergy's Hurricane deposit, which they've drilled extensively and have turned up, 60% ore grades right up to the border of Dawn Lake. And then you see nothing on the other side of the borderline of that deposit. Cameco doesn't report every drill result, and they keep their cards close to the vest, but we know they're spending 10 to 15 million in exploration on that project. So I think they see something there. But that'll be a nice one that is currently a tuck away, but will crystallize as new mines are developed in the basin. And then another one is Michelin. That was subject of much discussion in the last bull market. It's a 100 million pound deposit in Labrador, owned by Paladin. They've consolidated the ownership in that. And I think they see themselves being kind of dual production between Langer Heinrich and Michelin going forward. But it'll be interesting to see how that 2% gross revenue royalty plays out in Eastern Canada.
Scott, thank you for that. And thank you for some of those additional, down the pipe, if you will, projects that are going to be looked at as things progress here. I want to switch to the community front here, and then we'll wrap up, Scott, and appreciate the time.
Yeah.
On the community front, and I know this would be a different approach for URC compared to a conventional company here, but
Yeah.
talk about your efforts at URC to assist the industry with things like wisdom transfer. Scott, look, I mean, you and I both know there's a lot of old farts out there sitting around unwilling to put forth effort and actually train and mentor new talent, which is a serious problem in this industry, but also it's just the broad natural resource industry, but more importantly to this industry specifically. And look, and there are some, of course, and I commend those folks who have put forth those efforts. You and I, of course, have made our efforts in our own way. You've made efforts yourself, and I appreciate that. But talk about, what is being done at your office, at your desk, with respect to education, incentivizing people on skills development in the areas of engineering, mining, fuel cycle, but also, Scott, and this is an important one, within the community. Obviously, in your case, you've got lots of different communities globally, but then also bureaucrats that really don't understand energy or the industry.
Yeah. Well, kind of as opposed to a miner and developer where, take UEC, for example, they're in a very active hiring mode in Wyoming, and will be doing so in Texas as operations ramp up there next year. And so, we have been pulling from oil and gas and coal industries in addition to bringing on experienced uranium people. And really that's the critical path to UEC starting up in August is just been getting those new hires and well field technicians, plant operators up and going on uranium operational culture. So that's very important. I think in URC side, maybe it falls more to our commitment to ESG. I mean, we scrub every investment that we make through a number of screens, and we start with the resources themselves. So we have, Darcy Hirschkorn with decades of experience with Cameco Global Exploration. He'll go in and he'll scrub the exploration program and say, okay, did they have the proper rigor and controls to actually have the resources that they say they have? So that's a first step, and we just confirm that's been done properly. Then we move on to mine engineering and mine planning and permitting, and we bring in James Hatley, who is serves as an advisor to URC, who was mine engineer at Cigar Lake and McArthur River. He'll scrub the project from, okay, is what they're proposing, the mining methods, the milling, if there's tailings and things like that, have they thought it through properly? But then we do run it through a third screen, which is the ESG, and you can call it health, safety, environment, social responsibility. Are these projects, doing it the right way? Now, fortunately, there's very few bad actors in the uranium space, and we're not like other industries where there's a lot of, blood diamonds type producers out there. But we will, in some instances, if we're providing, say, $40 million to a project to bring that into production, in some cases, we will encourage maybe 5 million of that or something to be specifically directed to community development, whether that's just lifting impacted communities around the mining operation or providing training for people to be engaged in the industry locally. So we're doing a bit of that. I think we would do more if we were the direct operator of the mines, but I think it's important. I'm certainly doing my thing on the Capitol Hill and back there every couple months, educating folks on the Hill and the House and Senate and administration, and making sure they understand our industry, both in the United States, but also globally.
You guys are in a unique position in the sense that you guys can talk through your clients and your transactional folks that you're working with globally, but then also you guys too are in a position of a proponent stage of just the industry. And I think that's where it's useful. And of course, with your position and your connections, you can drive home that message as well in the different activities you're doing. So I think URC is in an interesting position as to how they would approach these activities. Obviously, you're not mining the uranium yourself or developing a project, but you guys can obviously have influence and lean on those folks to bring about good practices that makes the industry sustainable and responsible, and at the
Yeah.
same time doesn't go down the road too far in terms of degradation either, which is another problem that we're seeing pop up around the world, and specifically some jurisdictions. Well, one of the other things, Scott, just before we go here, I want to just have you cover off. You already gave us an idea on range, but the deal table in terms of, what is kind of the size range that you would be looking at this point? I think on the lower end is what we're looking for here, as well as preferred jurisdictions that you would consider for URC deals. So, for example, would $1 million deal get you interested at this point? Or is it really, Andrew, we want to see the 25 million, $50 million type deals?
Yeah, both. There are deals that range from, 1 million to 6 million that might, that would be acquisition of existing royalty interests. And if they're in interesting mines, even though they're small, we would certainly take them. I mean, I think eventually I'd like to have royalty interests on every mine in the world if I could achieve it, and certainly in every major jurisdiction. But the big financings tend to be in the 25 to $100 million range. We're looking at a project now that could be significantly higher than the $100 million range. And there we might get creative and we might provide 100 million in the form of a royalty stream, and then bring on equity investors. They might be strategic investors in URC that, again, appreciate our ability to do proper due diligence on these projects. And they may come alongside with, say, an equity injection or convertible debentures to provide a much bigger financing than just uranium royalty alone could do. Because we're still at a young stage. If we invest too heavily in any one project, we then start to throw off our diversified nature. We become too heavily weighted to one project, and we don't want to do that. Even if it's a great project, we still have to be mindful that people like investing in us because we're diversified risk.
Yeah, good points. And if it's a good project, obviously you can bump up that size a bit, but I understand the dilemma. I think that gets us a good flavor for folks that are listening in, and even companies. I mean, we know that there's lots of folks out there, institutions and bankers, brokers, and even companies that listen to our podcast now. So it's good for them to get a flavor of what you just said there, and the potential to reach out and have a conversation. That's where it's got to start. You have to plant these seeds and plant them early. Well, Scott, why don't we stop there for now? I really appreciate your time. And last question for potential investors who are listening in. The company has a market capitalization of about 275 million US dollars.
Mhm.
Why should uranium royalty be considered within the institutional, family office, and retail investors' portfolio at this point?
We fill in a nice niche. You can invest in the physical uranium ETFs, which give you pure commodity exposure. You can invest in straight miners and developers and the equities and betting on their ability to get into production and cash flow. You can kind of go the ETF route and just spread it out over all the names in the sector, or you can kind of go a different route with the royalty and streaming, which um, does give you diversified exposure, but it's a bit more of not a passive investment. We're very actively seeking out and adding the right projects to the portfolio. And royalties, if they're not the net profit interest type, gross revenue, top line revenues are also a nice kind of hedge against inflationary. I mean, if we're taking our cut off the top, that's an advantage to royalties over direct equity ownership in a project. And again, to date, I think all of our royalty acquisitions have come at less than 0.5 p to NAV. I think better projects you're going to have to pay up for them, but you're really there's a lot of value here, especially trading where we are today. I mean, I say the whole uranium sector right now is just it's a resting bull. The bull is resting, but I mean, all the fundamentals point for the next leg up. We're going to need a lot of new mine development, and that's going to boost our royalty and streaming model dramatically, and all the uranium equities across the board. So I think it provides a bit of a different approach to have that pure uranium exposure through the royalty and streaming model.
Agreed. Absolutely agree with that last statement, Scott. Thank you for that. And the best way for interested parties to reach out to the company.
Yeah, uraniumroyalty.com is our website. We also have coverage under Paradigm, Canaccord, and HC Wainwright. They do a lot of the legwork of putting proper valuations on all our assets. So if that's helpful, would encourage you to look to that research reports done on the company. But I'm accessible to as well through the URC website, and happy to sit down and have individual discussions with investors if they have particular interests or questions that we can answer.
Scott, thank you for the update. Keep up the efforts and looking forward to talking with you again later this year.
Great. Thanks, Andrew.